Hey there, everybody, and welcome back to another Forex Market Preview. My name's Jason, and I am very glad that you've decided to join me. We're going to get right to it. I talked in the email that I sent you guys this week about the chart that you're looking at right in front of you, or that we're going to be pulling over here in a minute. And I wanted to share a little bit and teach a little bit today in this issue of the Forex Market Preview. Now, a couple of action items before we get started. Next week I won't be here. As I indicated in my email, I am going out of town, and so we've got the holiday season right around the corner, and I don't plan to do a Forex Market Preview next week. With that said, I'll be back in the office at the end of this week and getting ready for next week. So I will be kicking things off. It'll only be one down week, and we will still, for those of you who are syndicate members and for those of you who are in live trading rooms and those types of things, those things will still be happening right up until the Thanksgiving holiday. And so consult your rooms for those exact dates and times and hours, because they are a little bit different depending on, depending on which room you're in. We have had some very, very good trading and some very good success this year across the board. Live rooms are doing very well. Akil's live room, which if you guys are interested in kind of taking the next step if you like what you see here, well, Akil's room does this type of ratio trading, has had a phenomenal year. And invite you guys to take advantage of that if you so choose. But let's go ahead and get started here. I don't want to waste any time showing you guys what's happening in the markets this week, and I want to start off because I posed a question to you. I said, how would you handle this situation? How would you handle this chart? And I'm going to get to some other stuff here in a minute, but I want to take some time and just really walk through this chart with you and do some analysis. Excuse me while I take a drink. Now, to the untrained eye, and I talk a lot about this, I talk about the difference between retail, what we consider home-based traders or retail traders, and professional traders. And the fact that professional traders just see things that retail traders do not. And it's not the fact that a retail trader can't become a professional trader, or that they've got the deck is stacked against them and there's no possible way that they can succeed. I think all of that is hogwash. The difference between professional traders and retail traders is the amount of time and effort and energy, and in some cases, diligence that's gone into their trading careers. Most retail traders do not get started in trading because they're wanting to start a career as a trader. Most of them start trading for the same reason that most of you started trading, because you saw it as a chance to make some money, to do something fun, to make some extra cash, but it wasn't ever pre-designed. You didn't finish high school with this concept of, I'm going to go and become a trader. You more than likely chose a completely different route and then kind of fell backwards into trading. And as I start to think about how I got involved in trading, I don't know if I could even pinpoint an exact time where I decided I was going to be a trader. I think that I just kind of started little bits and pieces, learning and going through the process. And it wasn't until I actually took some time off, reevaluated my trading and what I wanted to get out of this industry and out of this occupation, that things started to turn around for me. And I know I've told that story to many, many times, and I won't bore you with it here again, but this is the culmination, being able to look at a chart like this and make some decisions about what is likely to occur. So the first thing that I want to identify anytime I do something like this is the impulse leg. And in this case, I'm going to go sore thumb high to sore thumb low. And for those of you who aren't American and who don't understand that reference, in America we would say, it sticks out at you like a sore thumb. It's almost like if you took a hammer and you bashed your finger with a hammer, it gets really red and swollen, turns all black and blue, and it sticks out like a sore thumb. Well, if we want to identify the impulse leg, one of the easiest ways to do that is just simply to identify the sore thumb high and the sore thumb low, which is what we get right here. Then what we're going to want to do is bring in some ratios, and we're going to make some estimations about what the market has done so far. So in this case, I'm going to grab my Fibonacci retracement tool, and I'm going to go swing high to swing low. And in this case, I see that the market terminated or came to a conclusion right at the 618 retracement. That's the most recent move. Market came up, boom. then it pulled back, and we actually ended up breaking structure. If you look left here, here was the previous low, and we can see that this low over here not only closed below, but also not only made a lower low, but also closed below this previous low, giving us a nice solid retracement here. So if we're following this, we see that we have our impulse leg, we have also what is considered an anchor leg here, and then we have a rally up into a 618 retracement. Now we're getting a pullback. Now my next question is, well, where does that pullback go to? Let me see where that one ends up. Boom. And I see, wow, I came through the 618 into the 786, and then I stopped right there, and now the market has started to rally again. Now, all of this is kind of preparatory in our analysis, because now we've seen what the market has done. Now, based on this, can we make any sort of evaluation as to where the market is likely to go? I have an initial impulse leg, followed by a 618 retracement, followed by a 786 retracement. My knowledge of pattern recognition tells me a few things. It tells me that as the anchor leg comes down, if I've had a 618 and a 618 786, that the market is highly likely, if we rally, to come into a 127 extension with 786 ratio confluence. What that means in plain English is that if this market rallies and we come up into this zone right here, that there is a high probability that this market is going to reverse. High probability. We know to a point it's somewhere around 60 to 70% of the time we will see this market reverse between the 786 and 127 area. Now, this gives us an advanced pattern. This is what's known as a Gartley pattern, for those of you who are familiar with that. And again, if this is your first time, really listen in close, because this is important. This is the backbone of everything that we do here. It looks like a lot of lines, it looks like a big mess, but in reality, all we're looking for is this. This here to here, and back up into the 127 extension. And this, of course, is a Gartley pattern. Now, we actually have another pattern in here as well. If I go ahead, and all I'm going to do is just draw the pattern for you, but this is a cipher pattern, and this is actually the most profitable pattern that we have ever found. Let me just change the color here so you guys can see the difference in the two patterns. This is the most profitable pattern that we've ever been able to find. Let me just draw this in so I can make sure that all of my lines match up. This is right about 80% of the time, this particular pattern. So what we've got is a cipher pattern, and this cipher pattern terminating at the 786. So not only do you have the Gartley pattern here that could potentially terminate at the 786 127, but you also have a cipher pattern that could terminate around the 786. This gives you a very nice area where the market could potentially reverse, and this could happen here over the next couple of days. So as you guys are watching the market this week, keep an eye on euro dollar, where we have multiple patterns setting up showing a sell, a possible sell around 128.30s. All right. Now, if you want an example of this, what I'm going to do is I'm going to go ahead and roll over to, let me see, Aussie dollar. This is one we talked about last week. Give me just a minute. There it is. And here is a great example. Last week, I'm going to bump out to a 4-hour chart. I'll make it a little bit easier to see. But last week, we talked about two potential pattern setups. I said I don't know where this market's going, but I have a bat pattern here that could terminate somewhere up here around 105.70s. And I said I have a cipher pattern that would be a buy at around 102.87. Well, look at what happened. The market traded throughout the week. We went back up. The market rolls over. Boom, we came right down in, touched the 786, got our orders filled, and sucked right up off of it. Now we're looking at potential targets on this particular trade, on the Aussie dollar cipher pattern completion. Now, could we still come up and hit our bat pattern? Absolutely we could. It'd still be valid. If this market went straight north, right up into 105.70s, we've got a great selling opportunity there. But this is what I mean by being inside the market's OODA loop, about constantly staying aware of what the market's doing, of recognizing the new pattern formations that are setting up, and simply being in a position to take advantage. In the case of this particular pair, it doesn't matter whether the market goes higher or lower. I already know what I'm going to do. I already have my trade planned out, and all I have to do is place my orders and wait for the market to come to me, because I know where the high probability trading opportunities are going to be long before they ever occur. Let's take a look at another one. Here's one we've been watching for a couple of Forex Market Previews. This is, of course, Euro Pound. And Euro Pound, we saw a cipher here, Euro Pound, on the 4-hour chart, and we were looking for a buy around 79.80s. Look at where the market reversed. Right around those 79.80s level. Came a little bit deeper in. We didn't violate X, so the trade was still good. Ended up buying them up right around 79.80. Market rallied, taking us out at 80.40 for target 1. And that is about 60 pips of profit. And now our stops go to break even, and we're waiting to see if the market will come up to the 618 at 80.90s basically, and take us out on the second half of our position. But again, it's just simply watching what the market does. Let's take a look at something else. Don't think we're good here. Nope, not quite. Almost had another cipher set up, but we didn't quite have the numbers laid out. But here's a great example again of just keeping track of what's happening in the market and then trading the patterns as they come about. Let's take a look at another one. Let's take a look at Japan. Take a look at the yen. The yen here has put in a great start to the cipher pattern. Okay. Right here. Now we're looking for a potential reversal down into the 786 at around 78.52. Now here's the thing. What has the market already done here? Those of you who are students of mine, put in a double top. Look at the bottom of your screen. Bearish divergence. Do we have a counter trend trading opportunity here? Yes. You can either sell the double tops if you're a CTS trader. You can wait for the 2618 trade, which is a fantastic trade. Or you can simply hold this position and look for the 786 and look to buy the 786 as the market retraces. But this is a phenomenal opportunity here for you guys to stay inside, potentially short the market right here in anticipation of it coming down into the 786 where you could potentially buy it back up. And there are a half a dozen ways that we talk about trading these double tops and trading these reversals, these counter trend trades that some of you like so much. But my point being here is that when you understand how to read a chart, the world opens up to you. And this is the problem for most retail traders, is that they have never invested the time, they have never invested the energy in finding people who can teach them this skill. Because it is only in learning the skill that you're truly free. You can get involved in signal services, you can jump into live rooms, you can do any number of things, and there are good ones out there. We have some of the best here. But none of that will ever make you financially free. It will always make you financially dependent. Now, it doesn't mean those are bad things, because if they can get you off on the right foot, if they can teach you the discipline, if they can help reinforce the processes that are going to help make you a professional trader, then they're good things. But they're never going to make you financially free, because you're always going to be dependent upon those things in order to give you the signal of what to trade or for someone else to tell you what to do. It's only after you go through the process of learning the skill for yourself that ultimately leads you to the type of success and prosperity that you want to have. Now, as always, I always recommend, if this is something that interests you, if you really like this, get involved with the syndicate. The syndicate is like the next level. It's like taking the next step, and it's $20 a month. you will not find a better quality subscription program than the syndicate. You just won't. It's Akil and I run the syndicate. We put out trade ideas. We talk about psychology. We run through this process with you again and again and again to help reinforce all of the things that we talk about in the Forex Market Preview. And if you like what you're seeing here and you haven't taken that step yet, it's a no-brainer. You're getting involved in a community of people who are serious about their trading and who are trying to change their life and trying to learn this process. And I would highly suggest that you take that step to do it. As I said, I will be gone next week. Got a lot of stuff that I'm doing with the family. We're going out of town. I typically like to do some writing while I'm gone because I get a chance to reflect over the year and about my life, and that tends to be a pretty interesting read. People like seeing that, so I'll see if I can do something like that over the course of this holiday season as well. But I want to wish you guys a very Merry Thanksgiving. Very Merry Christmas and New Year's. We'll be talking more about that later. And I've got some very exciting news for you guys as we come into the end of the year, but I'm going to stay tight-lipped on it for now. You're just going to have to stick around to see exactly what it is. But if you have questions, comments, concerns, please email me. support@triplethreattrading.com. We have a whole team of people who are here to support you and to help you get where you want to go. So until next time, guys, good luck and good trading. I'll talk to you soon.